Here's why RSI isn't working for you and how to use it better. Today is Friday, September 12th, 2025. If you guys like the video and the content in it, maybe give it a like, thumbs up the channel, comment your thoughts, ask me questions. Also, come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. A couple of housekeeping things here as well before we get into it. So I talked earlier this week about slower days, maybe do a little bit of an educational video. We'll do that here right now because this was definitely a slow day. If you want to find more analysis on my thoughts on the market, I'll have the video on Wall Street from Main Street for the weekend wrap up. We'll likely do a video Sunday night for dealer positioning as well. But nonetheless here, I mean, the market was in a 10-point range for almost the entire day here, and we're melting up basically into the Fed. There's not really much else I can say that I haven't already said here for the most part here today. So we're going to do a little video on RSI, and I know it's kind of a basic indicator, but there's a few things I think that I've found over the years that I think can be shared, and you guys might like the content also. One last thing, Monday we will have our fall sale, so stay tuned for that. Active trader courses and swing trades will be on sale starting Monday for about 30 days. So anyways, without any further ado, let's get into it here. So RSI is it's probably one of the most common indicators out there. You know, you got Bollinger Bands, MACD, you know, not including like moving averages, but as far as like side panel indicator, lower or upper panel indicators, RSI is definitely one of the most common. And it's widely, if you're a little bit newer, it's definitely widely considered to be a flawed indicator for several reasons. But I'm going to show you a few things that I've picked up over the years that can make it better and how to avoid those kind of pitfalls that come up with it being a flawed indicator. Why is it flawed? Well, things can remain overbought and oversold for a very long time. And that's, you know, many of you guys know that firsthand experience, of course, right? Whenever I'm looking at a chart or looking at a trade, I never, ever, ever use RSI as like a primary factor. We'll call it like a supporting factor, right? So for instance, if there is let's say a 618 retrace and a trend line support, right? I would look at that and say those are two primary factors, or, you know, a 618, a trend line or a horizontal support, or, you know, a put wall or something like that, a dealer level that I like. Those would be primary factors. RSI would be, again, a supporting factor, meaning it can't just be a 618 and RSI oversold, right? That's not good enough. It's only if there's other legitimate factors, at least two, preferably three, and then adding RSI kind of builds your case. You know, why is that? Again, because they can remain overbought and oversold for a long time. If you want a really good example of that, just look at 2021. Go back, let's go to 10 years, there we go. I mean, like, so this is a very, you know, you had the overbought there in October 2019 and went a lot higher. We reset and then, you know, went overbought and just didn't it didn't go back. It didn't look back. Even with the 2022 bear market, right? It only you first went overbought on the weekly here. It took you a year just to get back there, and it didn't even, you know. So if you went short here, all you did was make break even if you happened to sell at the exact low there. And that's the other thing too, is like, yes, eventually it will correct. Like, it will correct. But what if it just corrects through time, right? What if it just corrects through time and not price, right? Looking at like an Apple here, you know, like, this is a monthly chart here, but monthly RSI at 83 and 83.35 for the largest stock in the market, which it was at that point. And you had a pretty good RSI divergence there, lower high in the RSI, higher high in price, but all it did was just go up and then just go sideways and then go higher. So it wasn't a situation where, you know, even right here you kind of got, I mean, here's where it first goes overbought, right, on this leg, and it never got back there, right? You know, if you went, you know, let's say, just in theory, like say you went short up here even, so right there, yeah, you could have in theory gotten paid out, but look how long it took, right? So that's the reason why we don't do that. So you have to understand that, price can always go higher, and the trend is most important. See my last video if you are interested in that. And it's, well, not my last video, but the last video in the trade school playlist. By the way, let me know if there's any other topics you guys like me to cover for these types of videos. And if you're asking about gamma, there's plenty of those in the trade school. Just check them out there. But anyway, so that's why it's not a, you look at, this is a stock that I own right now, but, and I'm, flat on the position, just a disclosure. But yeah, I mean, look at how many times it goes oversold, right? And in fact, even UNH recently, that one's been in the news a ton. Just because it goes oversold, it bounces and it still goes lower here. On the daily, it went oversold here, and then it went down another almost 50%. So that's why we don't do that. However, a few tips that I have used and I've picked up over time, and it's just kind of, through learning on my own and just my own observations here, would be, first of all, you have to, the reason why these things happen is you have to understand what type of market you're in, right? Again, going back to trend. Trend is everything. It's like one of the most overlooked concepts. I mean, everybody thinks like, oh yeah, no, I know trend. I don't think a lot of people do though, because they fight it often a lot. But trend is very important. You ever notice that RSI, right? It almost always, like on ES, it almost always works. I'll just get rid of all these lines here. It almost always works when you're oversold, right? It doesn't take very long, but when it's overbought, look at this. It went overbought right here. It just kept going. Why is that? Because the trend is up, right? Trend is going to be more powerful than any oscillator, right? Trend is very important here. And as you can see, the 4 hour, when it goes oversold, it's pretty damn reliable. Even on the daily here. Go back 5 years on the daily. This was your one failure. And it really, I mean, technically it did reset. So you could have, in theory, went long. And I mean, even with right here, I mean, you could have gone long when it went oversold, right? And all you did was get back to break even in that instance. But that was kind of your one failure, really. It didn't stay oversold long there. Right here was a low. We had a nice bounce. Right there was a low. That was a bear market low. Right here you went oversold. Right here you went oversold. These were very reliable. But then look at the overbought, right? Look at where it goes overbought. Right? It's right here, and then it just works it off and goes higher, and then eventually does correct. But right here, it's overbought, it goes higher, and it never corrects until 2 years later. And it took the Trump tariff take bomb extravaganza for that to happen. Right? So, hey, even here, you had a divergence, and it's still going higher right now. So trend's so very important. And if you look at the, on the other end, right, when we talked about UNH, right, trend is down. It's, it's really that simple. It seems very, juvenile, but that's it, right? It's that simple. The trend is down. It's not going to bounce the same way until that trend changes. So that's your big thing. So that's why oftentimes you're like, oh, it's overbought, but that doesn't mean it's a short. And just because it's oversold doesn't mean it's a sell. Now, when you can get a good, RSI divergence here with the higher low versus price, that often can help the case. But again, going back to here, just because it's divergent doesn't mean it's always going to play out. Look at how long that diverged for. You got to go all the way. I mean, so from there, well, we won't count that because there's your low. That's not fair. So we'll start it from here. But even so, 300 to 400, so there's 30%. They went up 30% more before it corrected that. There's actually, I think I have a study set saved on the MACD here. On the Qs, if I'm not mistaken. I do. Yeah, look at this. It's similar. It's a similar oscillator, but yeah, look at that. Look how long that took. But yeah, that's the point. Trend. Make sure you pay attention to that because it really will help the odds. That's why ES 4-hour oversold works really well a lot. And actually just used it like not even that long ago, a week or two ago. So we were short up here. It was both of these times, I think. Beginning August and the middle August. We get those oversold and it works. Again, combining with other factors, it wasn't the only reason, but you get the point. So another thing to look for, speaking of divergences, is that they tend to, and this is something that I actually myself overlooked for like quite a while, but they tend to often work themselves off after like between 40 and 60, depending on what side you're going on, but around 50 on the RSI, right? So you've got your oversold 30, your standard 70-30, and then somewhere around 50. It depends on the individual stock and how it's trading, which we'll talk about in a second, as far as individual characteristics. But what I mean is, I'll show you an example, and I'm just going to pick something that's been in a downtrend for a long time, right? MSOS here. Sorry if this brings up any PTSD for you people, but you can see here, so you have a divergence right here, right, with the lower low on price and the higher low on our side, but you don't though, because notice how after the low, you got all the way up to like 60. So like, in a way, that's like kind of reset, right? It's not so, like, you want to look at it more in the sense that if we had, let's say we bounced here and it only went to like 40 or 43 or something like that, and then it put in the higher low, like this, then that would be like, yeah, it's definitely a divergence, right? Because then it can just keep making lower lows like what it did forever. And again, right here, like, yeah, you might look at this and say, oh, it's higher lows, higher lows, higher lows. But again, look, you basically hit 70 here. You got close, you hit 70 there. And then look what happened. You barfed all the way down from 15 to like 5 or 6. And then, oh, look, but there's another divergence. Yeah, but it just kept going lower, right? So watch that reset. Like, make sure it doesn't go up too high. And again, it might be different on ES than what it is on MSOS, or it might be different on MSOS than what it is on Tesla or Apple or anything else. Gold, it could be anything, right? So make sure you're keeping an eye on that, which really brings me to my next point here, and that is that each asset tends to have its own characteristics, right? Its own personality, right? Like, I can tell you right now, for instance, and this just doesn't just go for RSI, it goes for everything. Like, I know that like Tesla has a way different type of market than Procter & Gamble, right? We know that for sure. So it's gonna make sense that every time something like this happens on this particular stock, then we can expect X, right? So like, I'll show you an example here of, I just remember this because this is something I shorted in 2020. This is NEO, and you can see here for this particular stock during this particular time, pretty much every time it gets above 80 on the RSI, right? It's not 70, it's 80, right? Every time it gets above 80 on the RSI, it starts to, not always, it's not an automatic, oh, go short right now, but it's a sign that, okay, like, it's getting ready to like, it's getting top heavy, or it's getting ready to consolidate at the very least. So now what you do with that information is, you don't just go short, right? But you see there's a bearish divergence, right? That's valid, right? It didn't reset, right? And then you can see the high volume reversal there. Okay, there's possibly a sell signal. You can short with the stop above the high. And similar here, right? Every time it gets above 80, it doesn't really last all that long, right? Again, you got above 80 here, or you got close to it, and then you got above, but it wasn't a short immediately, right? right? You got an impulsive gap. You know, wait for those reversal, wait for those distribution candles to come in. Same thing here, gets above, yeah, pulls back pretty nicely. It doesn't look like much, but this is probably like 15% on this stock, right? Same thing here, got above, got to 80, had a little pullback, no sell signal though. Above, no real sell signal till you started getting up here. You got these big ones right there with the divergence. All right, so that's going to be, you know, for that stock, right? So that stock in particular, just notice things. You know, observe, write things down, pay attention. Like for this stock particularly, it's 80 every time, right? For Apple, right, bigger company, right? So, you know, it's about 73 to 75, right? So it's a bigger company. You're not going to move as fast. So notice those little things here, you know, on ES here. We'll see if this plays out, you know, next week. The jury's still out, but you can see here we have this little tight wedge, which is trying to break above right now. But yeah, lately, every time it gets above like 77 or so, it starts to consolidate, right? Time gets above, yeah, maybe pops up a little bit here, makes me hot. Bearish divergence, right? Then boom, drops, gets to 70. You know? So you can just notice those little things here. So those are things to look for that will definitely level your game up. One last thing here too, and this is a big one that I probably didn't even learn this till about 2 years ago, but kind of goes along with trend. In fact, it pretty much goes hand in hand with it. But on the initial breakout, if there's a breakout or an initial thrust, the more overbought it gets, the better it is. Like the more bullish it is, I should say. I know it sounds counterintuitive, but I'll say it again. The more overbought it gets, the more bullish it is. That doesn't mean it can't pull back or won't consolidate soon or cool off, but usually that means that's confirming a bull impulse. Look at how hot it got here in a straight line at the end of 2023, right? And it didn't, again, here's another example, going back to the beginning. Did it correct? No, it just went through time. And then we just melted up, right? That's usually a sign of aggressive buyers. And again, yeah, we did reverse pretty hard here, but again, guess what? Higher low, higher highs. So it's usually a sign of aggression. UNH, same example. Like this just gets more and more just beat down here. Now, yeah, it did like have this huge oversold spike at the end, but look at what you're going into, right? So that's one like additional thing to look for. And again, just to bring it back to give you another bear example, we'll go to the 4 hour because it's a little easier to see. But this was something I picked up on and probably could have done more with it, but definitely in hindsight now, it's obviously easy to see. But look at how, like, yes, this was like the one time, you know, we talked about how it's in a bull market and almost always 4 hour oversold gives it a bounce. And how that one daily chart was like the one failure. Well, on the 4 hour here, I mean, look at this before. So again, observe, watch things. Every time we get 4 hour oversold the whole year, it's pretty much like a stone cold buy, right? You know, even if, okay, you bought here, like I'm not saying like a swing trade, but there's a day trade or a short term, if you're a 2 to 3 day hold, like this is good money here on ES, really good money, each of these times. All this one, boom, boom, 4 hour, 4 hour, 4 hour. Then what happens here in Feb? It gets oversold and it just keeps going down. That's your signal that something's different, and that was probably a good hint that this was going to happen, or that we were at least going to see lower prices, right? Maybe not necessarily we're going to have this type of dump, but every time, but that was your signal there. So pay attention to impulse and trend. Couple of things you guys might like. Anyways, let me know what you guys think in the comments. Any other topics you'd like to have covered. Outside of that, you guys take care. Have a great weekend, and I will see you guys all next week.